There's a tendency among options traders and really traders of all sorts of different vehicles to cling on to a trade which is not going well in an attempt to fight and win that trade. I would suspect everyone listening to this video is very familiar with that tendency. My guess would be almost every human has such a tendency. The truth is, it's a very counterproductive trait for all traders. And there are reasons for this. And the reason is what Mike Bellafiore calls capital. It's not just financial capital, although certainly when you're trading a losing trade, you're fighting to win a losing trade. You're tying up the capital that's tied up in that trade. But in my opinion, more importantly, you're tying up your emotional capital, which involves the finite amount of energy that humans can put into any endeavor, with the disappointments and the roller coaster rides you go through emotionally. There's just a certain amount of that you can take, and that's a form of capital, and you're basically eating up that form of capital by fighting a losing trade. And then finally, and perhaps most importantly, is your intellectual capital. When you're pouring all of your intellectual energy into winning a very difficult to win trade, you're taking that intellectual capacity away from seeking better opportunities. And that is why it's a very bad idea to cling on to a losing trade. It's better to dump it. So one analogy I like to draw when discussing this with people is to ask them this question. If you had the choice between 3% winning months, so you'd end up with 6% at the end, or a losing trade of 2% and a winning trade of 10% the next month, in which case you'd be up 8%, what would you choose? And I will tell you that even though most traders, when asked it that way, will say, well, obviously the 8% combination, in fact, subconsciously, many people end up vying for the lower return program. Why? Because then they can say they're on a winning streak. Then they can brag about how consistent they are. But what they're actually doing is having a lower return. And so clinging on to a losing trade, if you think about a losing trade for a minute, a losing trade is really one where if you, quote, win it, you're not going to win a lot. It's very unusual you go from a terrible trade to a great trade. It can happen, and certain trading styles will allow something like that to happen. But in most cases, you basically go from a lousy trade to, at best, a slightly positive trade, okay? So if you are working like crazy to have a slightly positive outcome, think about how much energy you're wasting versus doing something that will give you an outstanding outcome. So let me give you a case in point. If you were to trade the bearish butterfly in a modified way, you might do an approach, or you may take an approach which would involve lower target profits, lower maximum losses, a little less risk, a little less reward, which is the way I normally actually trade a bearish butterfly. So if you take a look at a decision I made on June 1st to enter a bearish butterfly, and that bearish butterfly was entered right after a kind of a little more than usual rally in the Russell 2000 index. So I figured we're not that far from all-time highs after that rally. Even if the market keeps running up to those all-time highs, we'll get a chance to build the bearish butterfly, and hopefully the market will settle into the body of that bearish butterfly and we'll make some money. Well, the market kept rallying pretty strongly after that. And before you know it, And by the way, the second day I added a second butterfly. So that's a little unusual in a bearish butterfly to add your second butterfly one day later. That means the market's really screaming up. And 9 days later, now I'm already down 10% in the trade, which is a bit much given that I have a much lower profit target as well as a much lower tolerance for loss on this particular approach to trading bearish butterflies in a modified way. And so on June 9th, when the RUT index actually hit its all-time high, I was feeling the pain in this trade and made a decision which is consistent with the theme of this video, which is, am I better off fighting this trade now where I'm down much faster than usual, close to my modified maximum loss targets? Am I better off trading this now, or am I actually better off taking an advantage of the fact that the Russell 2000 index had actually broken through into its all-time highs, which is usually, not always, but usually a very high probability entry for a bearish butterfly. Why? Because typically when an index breaks out, it will run for a while, but in a bearish butterfly you actually want it to run for a while. But usually it loses energy eventually, and that's the greatest condition for a bearish butterfly. You start a trade off, it rallies, you put all your butterflies on, and then the market settles in, pulls back a bit, and you normally do very well in a setup like that. That's a real high probability entry for a bearish butterfly, and that opportunity arose that day. So I had a choice: keep fighting this trade that was not going well, or dump it and enter a real high probability situation. And intellectually, the better move is take the loss, which annoyed me because I've actually been on a really good run with bearish butterflies, and now I couldn't brag about my winning streak anymore. But it was the right decision, because this is not a game of bragging about winning streaks. This is a game about annual return, which is the only true measurement that's appropriate for a options trader. So 5 days later, the trade's doing well. We'll see how this comes out, but it certainly gave me, no one's saying I will win or lose this trade, but I certainly put myself in a higher probability situation by dumping that first trade and getting into this newer trade, the August bearish butterfly. So the bottom line is, fighting to win a losing trade is a great way to blind you to the fact that new great opportunities are coming. So it blinds you intellectually, it affects you emotionally, and it's literally tying up your capital, meaning you can't put the capital into a better opportunity when in fact you are using it for a mediocre opportunity, and that's mediocre at best. You clear your head, you clear your heart, you clear your account, and suddenly you're clear. You can look at the market more objectively, and you can find a great opportunity. And this applies, by the way, not just to options traders, but to all forms of trading. So don't cling egotistically to a losing trade because you're a winner, you're on a winning streak. All that is something the market does not care about. The market is very happy to end your winning streak. Believe me, it's very, very happy to end your winning streak no matter how hard you try. It's happy to have you throw more and more capital into a losing trade, sucking up your emotional, intellectual, and actual financial capital. Market's more than happy to do that service for you. So if you don't want that service, and you shouldn't want that service, instead, clear your intellect, clear your emotions, clear your account, and enter into great opportunities. That way you will long-term be a successful trader. Thanks very much, and we'll see you next week.